So amazing. Welcome to everyone that's joining us on the recording as well. So actually, as you're all just joining on, I'd love it if you would quickly vote in our poll to let us know how confident you're feeling on this topic, which is, as you can see on the screen here, ESG investments, which is environmental, social and governance. And then we can check in back in at the end and see how we're doing. And I can see most people so far are saying somewhere between 1 and 5 out of 10, 1 being totally clueless. And that's okay. That's why you're here. We've got a superb guest for us this evening and a familiar face to many of you as well. We've got Ruth Downs, the financial advisor, come along too. So we've got a couple of 1s, couple of 4s, couple of 5s. Brilliant. Thank you. So hopefully we can get everyone boosted up that a little bit further as we go too. So I'm going to get us started. I can see we've got a couple of hellos in the chat box too. So thank you very much. And as we've said already, our topic this evening is ESG investments. We are thrilled to be joined by Dominic Smith, who is a fantastic expert in this field. I'm going to give him a proper introduction in just a couple of minutes' time as well. But as ever, for any of you that haven't come across VetYou before, we are a group of vets from a variety of different backgrounds. We've been locums, freelancers, company directors, employees, employers, worked in farm animal, small animal, equine, and we really were just joined by a passion for helping veterinary professionals gain education in finances and be connected with financial professionals that actually are there and open and kind and caring and making financial advice actually accessible and making it timely, because we know from our own experiences that getting good financial advice on time really does make a big difference. And a couple of us on the VetYou team learned that the hard way, and a couple of the others got really good solid advice just out of vet school. So we go and talk to a lot of vet students as well as vet nursing students and help them get in touch with people like Ruth as well. So we've got 3 pillars that we talk a lot about, and you'll see us speak about these on other events as well. We want to help you to protect your health, your income and your future. So we're talking around a lot of topics on all 3 of those areas. Now, very briefly about what we do and why we do it. I've touched a little on there, so I'm not going to read all of this out, but you can see that we help veterinary professionals, all members of the team, with a variety of financial topics. You can see them all listed there. We've got a fantastic event menu that I'm just going to share with you in a few minutes. And the reason why we do that is because we know that you've all worked extremely hard for your money. And so infrequently, we're actually taught what to do with it, how we can make it work for us, how to protect ourselves and who to speak to. We know that sometimes it can seem quite overwhelming, it can seem quite scary. And actually, we're here to break down those barriers, to make it accessible, to make it timely, to make it open, to make it empathetic as well. So like we said here, you trained for many years and we believe that you deserve timely, friendly, relevant, professional financial advice and education. And that's what we're here for. So without staying on this topic for too long, if you are interested in any of those other topics, you'll see here we've got a whole event menu for 2022 for you to check out. Every single event that we run is free to attend. They're all recorded. They've all got space for Q&A, which this evening we've got plenty of time for Q&A as well with Ruth and Dominic too. We've got quite a few that have been pre-submitted. And if there is anything that comes in through the evening, please know there's no such thing as a stupid question. If you're wondering it, somebody else out there is probably wondering it as well. So if you do want to send anything anonymously to me, you can send me a message. You can select my name, Katie, in the to field, and I can read that out. If you don't want to share that with the entire chat, that is absolutely fine. So yeah, ask away. Please make the most of these sessions as well. At VetYou, we have spent the time curating a fantastic bunch of financial professionals that we now know the industry. We're really thrilled that we've got 2 of them on this evening to talk through these really, really important topics as well. But please know that whatever you need help with, just come to us and we can certainly either help point you in the direction of education or help introduce you to one of the fantastic people that we work with, such as Ruth, who's on this evening, and we're joined by the fantastic Dominic as well. So that's enough from me on the whistle-stop tour of VetYou and why we do what we do. We're always here to help you, so please do get in touch if there's anything that we can be of assistance with. But our fantastic guests this evening are First of all, we've got Ruth Downs, who is a brilliant financial advisor. She is so down to earth, very approachable. The feedback that we've had from people that you going to Ruth has been absolutely fantastic. So if you are ever feeling a little bit worried about approaching someone for some assistance with anything finance related, know that Ruth is kind, open, empathetic, and there is no such thing as a stupid question. I know she always says she likes to call herself your best financial friend, and I think you can definitely go as far to say that that is 110% true. Now, Ruth works at Reflect Financial Limited, that is a part of St James's Place, which will make more sense in a minute when I introduce Dominic as well. But I just wanted to give you a heads up. The fantastic Ruth isn't feeling so well this evening. She is normally probably described as Tigger and full of energy, but I know she's picked up a nasty virus, so we probably won't have too much from Ruth this evening. But in the chat box, she will be there to answer your questions as well.
Sound a little bit like Kermit the Frog, I think, tonight. So I'll be on the chat. But thank you, Katie.
Oh, I hope you're feeling better soon, Ruth, and I'll be welcoming you for the Q&A as well. And our guest who's going to be doing most of the speaking this evening, we are so grateful for his time. I know Ruth recommended having heard Dominic speak on this topic as part of St James's Place, how much of a real wealth of knowledge and information he is on this topic. And I think she said, if he doesn't know it, it's probably not worth knowing. So we are really pleased to have Dominic Smith, who is an investment consultant for St James's Place Discretionary Managed and Stockbroking Services. He is a member of the Chartered Institute for Securities and Investment, and he's got 30 years investment advisory experience in both the UK and internationally, which is impressive in itself. We can't thank you enough for being here, Dominic, to talk about what is such an important topic and very timely at the moment as well. I know some of the statistics that you shared with us pre-event absolutely blew my mind, so I can't wait to hear from you now. And Dominic, I'm going to hand over to you to share your slides so that we can hear all about ESG investments, and then we'll come to lots of questions at the end. So Dominic, thank you.
Thanks, Katie. Thanks very much for inviting me along, and thank you for using a pre-pandemic photograph before the beard. It's made me look a lot younger, made me feel even older. If I can share my screen, let's have a little look. He said, just bear with me. Let's get that one open. Give me 2 secs. I think I closed it down when we had the practice.
That's okay. Don't you worry.
Let's just have a little look, see what we've got. So, bear with me. Right, hang on a second.
No worries.
I need to just minimize the moment and go and find the presentation. I'm very sorry about this. Excuse me.
Oh, it's fine, Dominic. Don't you worry. I think we're all very au fait with the wonders of Zoom now and the intricacies of how it just throws us a curveball every now and again. So anyone that's in the chat box, just fire in any questions that you might have as we go along. I know Ruth's going to be in there, and we're joined by Matt as well from the VetYou team too. So you've got both of us here from VetYou as well.
Right, looks like we're starting to go on business now.
Brilliant.
Let's see if I can. Full screen. Here we go. Apologies, I say I managed to close it down when we did the practice.
That's no bother, Dominic. Honestly, it's not the first time. I'm sure it will be the last time. So thank you so much again for being with us, and I shall hand over to you.
Great stuff. Can you see that? Is that okay, Katie?
That's perfect. Yeah, all good. You're good to go.
Just to give you a bit of background, I say I'm one of the investment consultants, so we work in the investment management side of St James's Place. Ruth is your go-to person for any advice. We're the team behind her that actually manage the investments and build the portfolios. So from an advice point of view, Ruth is your first port of call. But I work very closely with her and the team at Reflect, and do a lot of client meetings, a lot of client presentations. So we do work quite closely together. The objective of this evening is to give you an overview of our approach to responsible investing. This is a style of investing that's been around for over 25 years. It's evolved in that time from simple ethical investing into what it is today. It's something I've been very interested and very passionate about for quite a while now. Having been lucky enough to work in this industry and work internationally and understand the way different people look at different things, and society looks at different things. Coming across a way of investing your own money to have a positive impact on society and the environment is really important, really powerful. As a parent of 3 children, so 25, 23 and 21-year-olds, an interesting event around this was when I was at home during the first lockdown, and my son came downstairs and said, "Dad, I'm finally proud of what you do for a living. I can hear what you're trying to do with people and help them take control of their money, but also add to society and add to the environment." So it is something I'm very passionate about, and I think it's something, as you learn more about it, you as investors will share that passion, that interest. So what is responsible investing from our point of view? We're a discretionary service, so that means we help manage the funds directly for you that we invest. We help make those decisions around where you should be investing, when you should be investing, how to rebalance your portfolios. We try and take a lot of the administration away from you as a client. What we do is meet with you. We'll understand your risk profile via Ruth, and then we'll try and build bespoke portfolios that reflect your particular preferences and your values when it comes to investing. If we look at why we should be looking to invest more responsibly, and we go back to 1990, which doesn't seem that far away to me, but is obviously quite a bit to our younger audience. What's happened in that time? Well, global temperatures have warmed by at least 0.5 degree. Arctic sea ice has shrunk by almost 2 million kilometers squared. Sea levels have risen. Carbon dioxide in the atmosphere has increased by 60 parts per million. And the climate is so very different to what it was only 30 years ago. If we go back even further, and this is in the second half of the 20th century, and this is quite poignant to me as someone in the 50s, that this is all happened on our watch, if you like. This is what's been happening since I was born. And we can see the world population has increased massively. The amount of foreign investment, the amount of water use, telecommunications has gone through a massive revolution. Transportation has increased massively. You know, your EasyJet, your budget airlines. 50 years ago, travel was a luxury. Now it's seen as quite a budget treat, if you like. Paper production and consumption has increased massively. But when we get to the bottom, when we look at the human activities and the impact that we're having on the planet, we see the massive increase in carbon dioxide in the air in the last 50 years, nitrous oxide, ocean acidification, surface temperatures gone off the scale. These are all really worrying. The socio-economic ones are what we've done, and the earth trends are the impact we've had just in such a short space of time. Again, this slide here highlighting the problem. It's human. It's what we've done to the planet and what we continue to do to the planet. Global temperatures are now above any level they've been measured since 1850. Carbon dioxide concentrations are massive increase. If we look at the chart on the right, the old argument of global warming being cyclical is now being completely disproven. If we look, that there were cycles over thousands of years, but from 1950 to where we are currently, again, just take a second to look at that line, how quickly that's accelerated and increased. It shows that we're broken through the highest historical CO2 level ever, and not just by a small amount, but by an absolutely massive amount. It has to change. Again, this is quite a frightening slide. If we look at what they call Earth Overshoot Day, and that's the day at which the human race consumes the planet's resources quicker than they can replenish themselves. So think about that. We're consuming faster than the Earth can reproduce it. it's not sustainable. You know, if we look at 2020, we saw a small dip, but in the last year or two, that's moved back to normal again. And putting that in simple terms, at this moment in time, at this rate of consumption, we need 1.6 Earths to sustain us as a species. That means in August every year, everything we consume beyond that is not it can't be replenished. Frighteningly, if we were consuming at the level of North America in today's terms, we'd actually need 5 planet Earths to survive. It's simply unsustainable, and thankfully the majority of the planet are coming to realise that. With COP26 last year, the United Nations Climate Conference agreed to make significant changes, and this is why. This is a chart to show what would happen in the campaign or the challenge to stay below the Earth moving above another 2 degrees centigrade. If we take no action at all, by 2100, temperatures will have risen by 5 degrees, and the Earth will not be recognisable. If we maintain our current policies, it will still rise above the desired 1.5 to 2 degrees. And what we have to do is change. We have to change massively, and that needs investment. And on the bottom right there, you can see, to achieve this goal, you're looking at $2.4 trillion per annum of investment by governments, by organisations, by companies, by individuals to achieve that goal. And it's a must. This is a need-driven event. If we look what's happening in the UK at the moment, up until the recent crisis, our energy mix has changed considerably. The UK or Great Britain hopes to close all of its coal plants by 2024 to hit the net zero emissions by 2050. Compare that to only 10 years ago, where 40% of the country's electricity came from coal-powered power stations. And decarbonisation isn't just about renewable energy. It's essential to achieve decarbonisation, but there's also some other important themes as well. An ability to store power in the grid in the UK and around the world. More electrification, not just electric cars, but the whole industrial process. And that's the only real decarbonisation option. Equally, we need to become more efficient. I was speaking to Katie and Ruth earlier. I attended a meeting this morning in Glasgow, then one in Newcastle, then one in Leeds, and I'm here with you this evening, and I've not left this room. We need to become more efficient with our use of resources. We need to become more energy efficient. Waste management is a priority. Water management, again, a major priority, and overall resource management and efficiency. In 2020, during the pandemic, we were able to cut emissions by 5 to 10% because of lockdown. And we all remember those days: no airplanes in the sky, no cars on the road. That rate needs to be replicated every year up until 2050 if we're going to limit the temperature rise to below 2 degrees. Is that practical? Probably not. But what we need to do then is become more efficient in other areas to try and achieve that. The United Nations published its 17 Sustainable Development Goals in 2015, and the goal was trying to achieve and embrace and engage in those goals over the next 15 years. Businesses of all types have signed up towards these goals. Investment management community is part of it. We're trying to look to invest in the future of the world, not the past. The rate of change has never been as fast as it is today. If we look at the commitments made by car manufacturers, up until recently, your big BMWs, Mercedes, your Porsches were saying that they'd try and have an electric fleet by 2050. They've all brought that forward to 2030 now. The UK has said it will have no internal combustion engines at that time. The rate of change, the rate of engagement is increasing. And with this comes opportunity. it's quite common now to find companies and organizations incorporating environmental, social and governance standards into their analysis before they invest in companies. We try to do that, and we also try to focus on these United Nations goals as well. And here's a reminder, if you have seen them, and a sort of an illustration, if you haven't, of what those goals are. And this was a very powerful theme during the pandemic, that the world started looking at itself. We started looking at what we do, how we spend our money, how we consume, but also what was happening in society. And the real drive to end poverty and hunger, a real drive to help create a world where well-being is a priority, for quality education, gender equality, clean water and sanitation, where all these goals became a priority. A post-pandemic world was the one we all strove for, where we looked after climate action, where we looked after life below water, life above land. Unfortunately, the horrific occurrences now in Europe with Ukraine have made us think even more about what we can and what we should be doing in society. And our belief is that more and more investment companies and people will be looking to invest this way. So what is responsible investing? Well, there are three elements to it. On the left there, you can see ethical investing. Ethical was what was around 25 plus years ago. This was simply a negative filter. It takes out things like tobacco, alcohol, weapons, things mining, oil and gas, that type of thing that cause damage to society or the environment. We take those out and we look at what's left. On the right, you look at impact investing. Now, impact investing is about applying a positive filter. It's looking to invest in things that can have a positive impact on society, on social change, on the environment as a whole. And that's things like, thematic, like wind and solar, but also education, water purification, all these different types of opportunities there. And at the heart of this responsible investing style is ESG. And you'll hear more and more about ESG as companies publish their carbon footprints, etc., but also their ESG scores. And ESG stands for environmental, social, and governance. And that's looking at organizations in particular who prioritize not just profit. We look at companies there, and we want to invest in companies that have things like fully diverse boards of directors, equal pay across roles specific, no 0-hour contracts, organizations that give back to the society, the environment, the markets they operate in, and companies that do things above and beyond their primary focus. So that, for example, banks should give back to the water purification and resource and resource efficiency. Companies that build new stores, but only build them along very, very sort of sustainable models. And we analyze those companies to make sure that they're adhering to those commitments. Why should we as individuals invest responsibly? Well, we can all try to reduce our impact. I now drive an electric vehicle. Two of my children are vegan and one vegetarian. Myself and my wife try to avoid red meat at least 2 days a week. We're reducing the amount of international travel. We're doing what we can as individuals, and that's vitally, vitally important. But research by Nordea, who are a very large European investment company, have provided analysis to say that actually the average person, by simply moving their pension savings into a responsible investment style portfolio, would increase their impact by 27 times. And how does that work? Well, it allows you to make a change as an investor. An individual, a group of individuals can change the way an organization behaves. You can invest in companies that do adopt the United Nations goals and avoid those that don't. A great example is a mining company called Rio Tinto. Wouldn't be involved in this portfolio because it's a mining company, but a way to illustrate how investors can change behaviors. Rio Tinto is the second largest mining company on the planet. And up until 2 years ago, it mined coal. But the shareholders got together and said, no, we need to stop mining coal. And so they no longer do that. And that's the type of influence you as individuals and as a collective people can have. The third bit, and possibly the most exciting bit, is the ability to invest in the future, to take a forward-looking approach to investment. This isn't just about greed, it's about need, but it's about long-term sustainable investing. It's about investing into companies and assets that will be here in 25 years. If you look at the FTSE 100, the top 100 companies in the UK, and you go back, I think, just 25 years, 50% of those companies are no longer on the FTSE 100. So it's about looking into, as I say, looking into the future, looking into what we'll need as a society and what the environment needs, and only investing in companies and assets that are working towards those goals. Again, some independent research there by Harvard Business School showed that companies that adopt a sustainable space actually outperform their peers by about 4.8% per year. Now, a word of warning here: a lot of this style of investment is about looking into new, emerging services, etc. And what we've seen, certainly the volatility over the past 5-6 months, does impact what this style of investments look like. But again, these investments aren't purely for greed; they are for need as well, and they're for long-term sustainability. So when adopting a responsible approach to investing, there are different ways you can go about it. You can exclude, as we've mentioned, do a negative filter and take all those things out that cause damage to society or the environment. You can focus on assets that adopt a responsible investing criteria. You can look into themes, so wind, solar, battery technologies, that type of thing. Or you can focus purely on a sustainable approach and looking at enterprises that deliver specific positive social or environmental impacts. When we build portfolios for our clients, we try and be pragmatic as possible, so we consider all of those approaches. Our primary goal is to give you a healthy return, but in a healthy manner. So what does a portfolio, what does your investment look like? Well, when building it, we start by taking everything on the left away. Anything that causes environmental damage, non-medical animal testing, alcohol, gambling, tobacco, pornography, etc. We then put the positive screening elements in. So we look at things like water management, environmental services, clean energy, resource efficiency, education, sustainable transport. And then we build a multi-asset portfolio. And what that means is we have different types of investment. There's an element of cash. There's an element of directly held stocks, so individual stocks in companies, so we can influence those companies. There are funds or collectives where we look at specialist investments to achieve certain goals, and we'll come on and give you some examples of that later on. The alternative investments, that's anything that's not an equity or a bond or a fixed interest investment. And in this space, those can be really quite interesting. One of the areas we invest in is social housing. One of the areas we invest in is a music royalty scheme. Again, you know, it's very different, very interesting compared to a traditional portfolio, if you like. And then we look at fixed interest investments where you're lending money to organisations or governments, and they're paying you a set amount back each year, and then your money back at the end. But we're seeing a rise of green bonds now, where governments like the UK and Germany are launching bonds where whatever money they raise has to be spent on green projects. And again, when we mentioned earlier on the amounts, that the trillions that need investing to achieve that less than 2% increase in temperature, these are the type of things that are going to be invested in the future. I'm hoping I'm not too technical at this stage, but what I'm trying to cover off here is the level of research and analysis we go into to make sure that we present you with the best solution. So we take quite a broad approach. We look at different approaches from the fund managers. We do look at different industry sectors. We go in and meet with the companies and the fund managers we're going to invest in and discuss their credentials and continue to monitor those. We build a portfolio. This top-down decision is all about how much should be held in different asset classes there to give you a smoother return. Continue to do an analysis on what we've invested in. Continue to meet with the managers, understand their research, see what type of things they're looking to invest in now and in the future, and also monitor their performance to see, are they the best in their class? Are they ones providing exactly what it is we want? And we regularly review all our clients' investments against a very fast-paced changing economic and financial background. You know, the rate of development in technology, in particular pharmaceuticals, means there are new opportunities arising all the time, and we want to make sure our clients have access to that. When we invest in funds, we use a scorecard where we look to see what was the best ESG analysis in each of those funds. We use a third party, an independent third party who've been around again for 25 years now, called Ethical Screening. They give an oversight of the various funds we can invest in. When it comes to direct equities, again, we use third parties as well as our own research team. But before our research team get even access to this universe, they've gone through 2 checks by Ethical Screening and Refinitiv as well. And then our own in-house final filter, if you like, to make sure that everything we're investing in meets our goals. The sectors and themes differ wildly to the type of investments when I started in the industry 30 years ago that you could access. If we look at the actual size of the investment universe that we can look into now, from renewable energy, energy efficiency, dematerialized economy, doing more with less. You know, again, we've got this great opportunity to speak to you guys right now, and yet none of us have had to leave our homes. You know, we can learn an awful lot more without having any damage to the environment. Water supply and technology, again, not just providing clean water, but managing wastewater, waste collection, recycling, sustainable repackaging, the circular economy, you know, making things, taking them apart and reusing them. The car I drive is a Polestar, and they've committed to being completely circular by 2030, so that every car they build gets dismantled and remade into another car. And these are the type of things we have to start thinking and planning in the future for, or we're going to face some really quite serious consequences. Some examples of the companies we invest in, and these will be through our international sort of collectives range, if you like. But Novozymes is a biotech company, produces enzymes for something as simple as washing powders and dishwasher tablets. But what's important about it is it lets you clean at much lower temperatures, which means you use less energy, which results in less CO2 emissions. There's a US company that provides global GPS and satellite services to the farming community. And what that does, it allows the farmer to massively reduce the amount of fertilizer they use by being able to analyze from the sky exactly where it's needed. That reduces the amount of input, increases productivity, reduces costs. Fertilizers production is very carbon intensive, so it helps reduce that and improves the sort of water and soil pollution. And in 2018, there you can see they avoided 8.7 million tons of CO2. DSM, you know, the dairy industry is a massive industry, provides really important nutritious dairy products to society. Also, you know, creates a livelihood for billions of people around the world. But unfortunately, a byproduct of cattle is methane. And 60% of emissions created globally are during milk production. What DSM does, it's an additive given to cows, which it's been developed over 10 years. It reduces the methane emissions by about 30%, has an immediate effect. It's safely broken down in the cow's digestive system. And once it's stopped giving it, the full methane production resumes. So there's no lasting effects on the cow, but you can see straightforward there straight away the addition of something like this and the impact it can have when we think of how much methane is responsible for the CO2 emissions. RELX, again, another company we invest on an international basis. Not only does it provide publishing and information to the science, medical and legal industries, also does analytics, helps companies reduce their carbon footprints, but they've also got a range of online tools. And one in particular is the Eyewitness to Atrocities app. This is a secure app, which means that it can document and report human rights in a secure, verifiable and safe way, so that can be used as evidence in a court of law. If we look at one of the collectives we use, you can see there the themes are all around those United Nations Sustainable Development Goals, all aimed at resource efficiency, environmental services, water management, safety, education, well-being, health, sustainable transport and cleaner energy. How we invest, we can invest in a range of ways. Our portfolios are built to our clients' needs, depending on the size of that portfolio. So the bespoke portfolios for pension funds, etc., normally start off around about £100,000. For a million and above, we can build very bespoke, tailored portfolios for clients. And for clients who are looking for ISA-style investments, we have a portfolio which is made up purely of collectives or unit trusts, but again, all in line with the goals we've been highlighting earlier on. So to summarise, the approach is it's a discretionary managed service, gives you a portfolio whose main aim is to give you a healthy return by investing in high quality companies and collectives, but also taking that extra element of taking a more responsible and sustainable approach to investing. Tim Cockrell, who's head of this particular division, again, has been involved in this for 20 plus years. A quote there about connecting the abstract world of investment to the reality of the real world and the impact it has, either good or bad. It's about the connected nature of all things in the world, from ecosystems and our climate to poverty and prosperity and social injustice. And by doing this and making these investments, seek to change. Just finish off there with all the regulatory requirements. I'll leave those on for a while just to show who we are as part of the St James's Place business, but happy now to open up to any questions, any bits you want to chat about.
Oh, amazing. First of all, a big thank you, Dominic. I think I was expecting there to be an awful lot that I was going to learn, and I think there was more than I even expected there. And just to see the impact that where we put our money, not just to avoid the companies that are maybe doing unfavorable things, but to be able to fund all of those amazing things is fantastic. And we have had quite a few questions come in. I was going to start with a couple of the pre-submitted ones, and then we have had some ones that have been direct message to me as well. So one of the things that's come up is someone said, just because a pension says it's ethical, how can they be certain that it's ethical, Dominic?
I think I mentioned earlier on that our approach is more responsible and ethical. We incorporate ethical. Ethical is a negative filter. It takes out all the bad stuff, but that can actually be subjective. There's an argument to say that whilst oil companies and mining companies in particular are causing damage to the environment, we still need them. We still need, we need rare earth metals to be able to produce electric vehicles, etc. So a fund or an investment saying it's ethical isn't the only measure it needs to have. You need to look at the underlying, who rates it, who recognise it. Companies like Ethical Screening will give a score to every fund that's out there, and you'll be able to see quite quickly what score it has on their charts to see how it measures up. So, sorry, the simple answer is you can't be certain by just saying something's ethical, but as I say, ethical is a very limited, it's just a negative. I don't think if we're taking a responsible approach, we can just rely on ethical as a filter. Yeah.
And what was the company that you said provided the score, Dominic?
There's a company called Ethical Screening.
Ethical Screening, super. Yeah. And is that something that people can just search online and?
Yeah. They're a big company up there.
Super. Thank you. And our next question that we've had there as well
The
is
best way, Katie, is to come to a business that does it for a living, and that's them to do all that legwork for you.
Good shout. This next question, I think we've kind of answered there already, actually, with the last piece of signposting you've given us. Is there a list of well, actually slightly different, but is there a list of ethical companies to view anywhere? I know we've said ethical versus responsible, which these questions were before you'd kind of given the differentiation between those two.
And again, it's if you want to find out more about the companies you're thinking of investing in. Now, the question's twofold there. Are you talking about the investment company who's going to invest on your behalf? Because St James's Place has pledged to adhere to the UN responsible investing guidelines, and we publish our ESG score print, as do a lot of individual companies as well. So if you're looking to invest into an individual stock, you can go onto that individual company and say, okay, where's the ESG bit on the website, and understand what they do. What I would say, a word of warning there is how some companies report their CO2 footprint. There's 3 ways: scope 1, scope 2, and scope 3. One is about just saying what direct emissions you do as a company. Scope 2 is more, it adds in the type, how much power they use and bring in, and what they purchase and offset. And then scope 3 is about everything. We will use scope 3 when we're assessing, but a lot of companies will publish scope 1 or scope 2. So again, it's about bringing experts in to give you that additional peace of mind to say we're doing that research and analysis on your behalf.
So interesting. Thank you, Dominic. There are so many insights that certainly I would not have had any idea about. So thank you. And another good question that's come in that I think will be quite relevant to a lot of us as well is, how would we find out where, say, our workplace pension put their funds to? Like, what will be the first step towards finding out a bit more about that?
A couple of steps. First step is to get a list of the funds that you're able to invest in. Most companies will give you a range of. If you just default to a risk profile, which makes perfect sense, by the way, for the majority of people, if you see yourself as a low, medium, or high risk investor, and you're happy that the company makes those decisions on your behalf and will invest in those funds, that's great. But if you want to know more about it, you need to speak to the pensions administrators and ask them for the list of funds that they do invest in and can invest in, what opportunities you've got to self-select maybe. But again, Ruth is fully qualified in pensions advice and would be, I'm sure, happy. One of the key benefits with ourselves and part of St James's Place is we're actually we're the whole of market element to St James's Place, so we can look at existing investments and holdings you have and give you a bit of an insight into it, and then hopefully you've got an informed choice as to what you do next. But definitely always contact your pensions provider first, understand what opportunities are there, because more and more pension providers, again, post COP26, the government put a lot of pressure back onto the financial services industry to take some responsibility for change, and so there are more opportunities. But again, from an advisory point of view, you need to speak to a pensions expert like Ruth.
Super. Thank you so much, Dominic. And I can see Ruth's popped in there as well, just how you can email and get in contact with your pension providers, and popped a list there and just asking the question outright, like you've said there. And then Ruth has very kindly opened a diary. If anyone has specific questions or they want to talk about their own individual circumstances, we'll pop the link to Ruth's Calendly so you can just book a call in, and they're complimentary. Ruth is very kind with her time and she just wants to help. So we'll get that link in the chat box. I can see we've had a couple of others that have come through. We've got one that's come. If we have personal ethical views, are we able to explicitly ask for these to be taken into consideration in our investments? For example, no factory farming.
Yeah, absolutely. A lot of it depends on the size of the investment, absolutely. But if I use myself as an example, when I transferred all my pension pots across to this portfolio, my entire career has been in financial services. So I still have stocks for every company I've worked for. I still work for a financial services company. I still get some reward in stock within the company I work for. So when I built my portfolio, I avoided the financial services sector altogether and said, right, you know, that's me away from that altogether. So the answer is yes and no. It does depend on the size of the investment you make. And if with a smaller investment portfolio, we're going to use collectives and they're not as easy to put that type of restriction onto. But if it's a larger investment, we can do, again, one of the things we do is we've got those various filters. We've got the ethical filter, we've got the ESG review, we've got the impact side of it, and then we've got another questionnaire that we can go through and say, okay, are there any specifics? But sometimes it can't be avoided, but yeah, it certainly should be discussed.
Thank you so much, Dominic. I think that answers it superbly as ever. And just talking on the topic of actually where to put your money, and this might be a question for Ruth as well. We've had a few people that have direct messaged and said they were wondering about any tips on getting started with investing into, I don't know, an ISA, finding out like the expected return, and as being a complete beginner, and obviously now having watched this fantastic presentation and feeling very inclined to try and make sure that their funds are going towards responsible investments. Like, what would be the best starting point for them?
Ruth, over to you.
Yeah, I'll try and answer this just with my voice. Definitely get in touch, and we can have, you know, a one-to-one, and we can talk about your options. If it's to do with kind of the return of kind of the funds, what we use is we look over kind of like a 5-year period of the fund and the past performance, and we can give you an idea of what that fund's done. Now, obviously, past performance is no guarantee of future performance, but you'll be able to see how well the fund has done. We have one specifically, I actually got it up for anyone. And when I've spoken to a lot of vets, they've said, look, I want to take a bit of a responsible standpoint when it comes to investing. And we have a sustainable and responsible equity fund that we can help put either your individual savings account or your pension in, a proportion of it, all dependent on how, you know, what your risk profile is as an individual. And on that fund kind of fact sheet as well, you'll be able to see the top 10 holdings of where that fund is invested kind of in, and you can look it up and look at the companies, look at the proportions and why they have that stance. But 100%, just get in a free call with me. I'll happily discuss your options, and we can go through what's going to be the right solution for you.
Brilliant. Thank you so much, Ruth. I've just popped into the chat box if anyone does want to book in to talk to Ruth. And this is along a similar line, really. And I think we've part answered this here, but someone's just asked, as an individual investor, if there are specific funds we're interested in, what's the best way to clarify their ESG impact? E.g., I'm interested in the Bailey Gifford Positive Change Fund or Trioda's Impact Investment Fund, but want to make sure I've done my due diligence.
Speak to an expert is the answer. You know, you guys are all experts yourselves in your field. It's about trusting a fellow professional to do that review for you and give you the type of insights. If what you want to do is individual self-select investment, then, you know, we do have stockbroking facilities if that's something you're interested in, either advised or non-advised. But again, it very much depends on where you are in the investment sort of timeline. If you're starting out in life and you're needing support and guidance and advice, then there's no one better there than Ruth and the team. If you're quite a sophisticated investor and know what it is you want to do and have got the funds to do that, at the other end of the scale, we've got a stockbroking team who'd be delighted to help you with that type of guidance.
Super. Thank you so much. And I think, go on, Dominic.
Back to the beginning, I would always go through an expert. I would always go through a professional just to be able to take that overview for you.
And I think one of the things that came out of watching that presentation, certainly for me, was the level of due diligence that you do go through. And obviously we can see one thing as an outside view, but potentially there's a lot of other different things that are going on when you start diving into like you say, those more specific terms and different ways of like carbon reporting and things like that, which actually just goes to show, doesn't it, the value of having a team on board that are au fait with this and very experienced with it. And we do have a couple more questions. I think we've got a few more minutes left for us to whiz through these. So thank you so much for answering so in depth so far. We've got, and again, I think this will come back to what we've just said here, but I'm going to ask it anyway. How do I know the difference between a fund that is refraining from investing in climate damaging companies versus one that is actually actively investing in good?
Again, most funds, when you look at their fact sheet, will tell you what their principles are and what their goals are. But again, to do the amount of research to go and find those, look on the fund fact sheet, understand and analyze what's the top 10 holdings are and everything else is a lot of effort, a lot of time. When you've got a team ready who can do that for you. But generally, if you go onto the provider's website, look up the latest fund fact sheet, they'll tell you what their goals and objectives are, and we'll often have a little bit more detail around if there's specific funds you're interested in looking into.
Super, thank you so much. And our final pre-submitted one, so please do, if anyone else has got any questions that you want to send directly or you want to pop in the chat, please do, because we've got a few minutes of opportunity left. And again, I appreciate this is a very wide open question. Is ethical / like we say, responsible now, investment profitable?
The analysis I would give is twofold. One, up until the Ukraine crisis and the volatility prior to that, our responsible investing service was performing as well, if not better, than a standard medium risk style investment. But again, because of the nature of it, it is a little bit more volatile because there's a lot more smaller companies, a lot more. But responsible investing isn't just about greed. That's the thing. It's about giving you a healthy, balanced return and having a positive impact on society and the environment. So if you're very returns greed based, that's fine. You're possibly not going to get this style of portfolio because they're not. It's not going to invest in oil and gas, and that's seen ridiculous returns because of the current crisis. So yeah, our goal is always to give you a healthy return, but in the right way. But certainly from a risk profile, it's a moderate risk portfolio, so it's got expected moderate returns.
I love that concept because actually, like you said, if you had however many hundreds and hundreds of returns on there, but actually we don't have a planet to live on, it's probably not that much use, is it, at the end of the day?
The joke on the side, the phrase I often use is this service is set up quite literally not to set the world on fire. it's to stop that happening. That's the goal. So it's if it's short term risky gains, this type of service, Luke's expertise as a qualified financial planner and wealth manager, and with our expertise as discretionary stockbroking and SJP's overriding sort of approach to responsible style investing, we're not the type of business that will take short-term gambles for high returns, even if it is in a positive way.
And I think that certainly has come across throughout this evening, Dominic. And I was going to just quickly ask Ruth one last question, because I appreciate at the moment we've gone through a lot of content there, which has been brilliant. I know I've learned a huge amount there. And if people are sat at home thinking, oh, you know what, actually, I've learned a lot, I'm not quite sure of the next step, I feel like the next step would be to speak to someone. Obviously, they've seen Ruth on quite a few of our events now. I just wondered if you could just outline what people would expect if they were to jump on and speak to you, Ruth.
Yeah, 100%. So obviously, first port of call, email into to VetYou. They will put you in touch with myself or another professional. And what would happen is I would send you, first of all, an email introduction. I'd introduce myself, find out a time convenient to you where we would just have a chat. We can do it over via Zoom or a call, whatever is the easiest thing for you. And that's usually about 15 minutes to half an hour. You explain your circumstances. Honestly, there's no such thing as a stupid question. I promise you, I've probably heard it before. And I wouldn't be a very good financial advisor if, I didn't answer all your questions and make you feel comfortable. So please don't even think twice. Just pick up a call, email into VetYou. We'll have a friendly chat. And I'll help you as much as I can and into your specific circumstances, because everybody's different. And I'm here and I'm happy to help, through my own circumstances of not being able to get help when my mum was really ill. I reached out and I couldn't get the answers I wanted, and I was made to feel stupid, and I vowed no one that would ever know me would ever feel like that again. So when I say that I'm approachable, there's no silly questions, I'm always at the end of the phone, I mean it. So it's complimentary. It's, we're here to help. So get in touch. It's what I'm here for. And it's why I do the job that I do, because I love to help people, and especially vets. So
oh, thank you so much, Ruth. And we definitely all testify to that. Anyone that has jumped on a call with Ruth has sent some fantastic feedback and always just comments on how friendly and how approachable she is as well. So I think we're just coming to the hour mark. So I was going to start wrapping up. But first of all, I wanted to say a huge, huge thank you to Dominic for coming along and sharing his expertise and his experience and his insights. We have certainly learned a huge amount, and I know that everyone that's watching the recording will do as well. I know my eyes were certainly open to lots in that presentation, and I know there's lots of things that I'm going to be going back and having a chat with Ruth about myself as well. So thank you, Dominic. We're so grateful for you coming along.
Thanks for inviting us. Appreciate it.
Oh, and thank you to Ruth as well. And finally, a big thank you to all of you for being here too. I realise it's the evening before. I know a lot of you are probably heading to BSAVA, and there'll be many of you that are catching up as well on the recording too. I can see we've got some thanks in the chat box. Thank you. This was brilliant. Thank you. And I was just going to finish up with a couple of calls to action. If anybody does want some signposting from here, we would love to know what your key take home has been from this session. So if you could gift us like 20 seconds of your time and let us know what you've learned in this session. It's really helpful for us to reflect ourselves and look at what we've learned in here. And it's useful for us to make sure that everything's coming across well as well. So please do share. You can always email us afterwards if you have things to head off and do. You can book a call in with Ruth. She has gifted her time. She has opened her diary. She is super approachable. We've had nothing but good feedback come back on Ruth. So please do have a look if you want to take action off the back of this call. Check in. You can book in to speak to Ruth, like we say, free of charge. Can we help you with something else? Is there another topic? Drop us an email. We will help redirect you to whoever it is that you need to speak to, or help introduce you to Ruth. Like she said, we can show you some of the playbacks from the other sessions that we've done. We did a fantastic one with Ruth at the end of February, which was just on savings and investments as an overview as well in general. So please do check that one out. You can see our full events menu here. We have a digital delegate bag full of goodies and information, a financial check health list as well, that Ruth has a fantastic spreadsheet in there where you can go through your incomings and your outgoings and just really get some clarity on paper. So please do check that one out too. We'll pop that in the chat in a minute. You can follow us on social media. We're always advertising our next event coming up. And please do, if there's one thing you could gift to us, would be to spread the word amongst your colleagues, because we are out here trying to make finances more accessible, more understandable, and connecting you with fantastic people like Ruth and like Dominic, as we have done this evening too. So as we've said, a huge thank you, and we'd love to see you at our next two events. The first one being, is it too late to start a pension, which is at the end of March, and how to ace your salary negotiation. And that one is at the end of April, and that's with Paul Horwood, one of the VetYou team. So we'd like to say a huge thanks again to Dominic and to Ruth and to everyone that's been here live. And thank you to everyone that watches the recording too. We'll pop these links in the chat. And for anyone that's catching up, you'll get all of the links alongside that in the email and on the page with the catch up too. So thank you, everyone.
Bye now.
Thank you.